Welcome to another episode of Mortgage Masterminds. I'm Richard Greaser, VP of Marketing at Sales Boomerang and Mortgage Coach. And my guest is Tim Herman, CEO at UpEquity. Tim, thanks so much for joining me.
Yeah, thanks for having me. I'm excited.
Cool. So I like to start off with a little story. Recently, I talked to a loan officer at one of our clients, and he got a piece of intelligence for Sales Boomerang. It was a listing. It was a listing alert. And when he got on the phone with the borrower, he didn't end up getting the next home that the borrower was buying, but he did get a lead into the sister who was renting. And the sister, it turns out, had been thinking about buying for a while, but was scared because of the current market environment. And that loan officer also uses Mortgage Coach and did a rent versus buy analysis that really showed that it doesn't matter that rents are rates, what the rates are right now. What really matters is that you go from renting to owning, and that owning really gets you equity. And the borrower was just blown away by what that difference looks like in 5, 10, 15 years. And so you got to have that in your back pocket, in your toolkit in this market. If you want to find out more about Sales Boomerang and Mortgage Coach, go to the websites, check it out. But without further ado, let's jump into it right now, Tim. Tim, I'm sure you've heard a lot about, a lot of similar stories in this current market, right?
Yeah, absolutely. So, being armed with unique value add products or with unique value add ways to talk through the differences between the buying and renting is what is going to keep people afloat while transactions are drying up.
Yeah, absolutely. So why don't you just tell me a little bit of background about yourself and UpEquity, how you became CEO at UpEquity, how this got started, and maybe some of your background in the mortgage industry.
Yeah, sure. I have a pretty non-traditional background. Actually, I spent the beginning of my career, I was a fighter pilot in the Navy. So I flew F-18s and F-35s off aircraft carriers around the world. So, if you've seen the new Top Gun, that's the jet that I flew for most of my career. A bunch of my buddies are actually the ones doing the flying in that movie.
How was that for you to watch?
It was pretty fun. I have two young kids. I have a 6-year-old boy and a 2-year-old boy, and I brought my 6-year-old to the movie, and he was so excited after it that he brought my old helmet and oxygen mask to kindergarten the next day for show and tell, which was kind of a proud dad moment for me.
Dude, that is so cool. And recruiting just went like this after that movie. Like everybody's like, I'm gonna be a pilot.
That's right. And the flying was really good in the movie. It was pretty realistic. For the most part, I really enjoyed the movie, and it was fun to watch.
Yeah, that's awesome. And so tell me about UpEquity and your story there.
Yeah, so the way that I got from being a fighter pilot to being in residential real estate is that when I was on active duty, I didn't feel like there were any avenues of wealth creation that were open to me and my family other than buying and selling single family real estate. So as my wife and I moved from duty station to duty station, we got really actively involved in buying and selling single family real estate. And we saw all of the reasons that home ownership is the cornerstone of the American dream. We saw the security that it provides both financially and physically. We saw the upward mobility that it generates, and we saw the wealth creation that it enables. But the problem is we also saw what a nightmare the journey to home ownership is in the modern day and age. Housing Wire has this statistic that I quote a lot that says buying a house is such a stressful occurrence that it leaves 1 in 3 home buyers in tears. And unfortunately, I've been in those shoes. My wife has been one of those 1 in 3 home buyers in tears as we're standing on the doorstep of our new home. The military moving truck is in the driveway, and we can't get the keys because the mortgage is delayed, right?
Mm-hmm.
And it just didn't make sense to me that the biggest purchase that most people make in their life is leaving 1 in 3 home buyers in tears. And it didn't make sense to me that in 2020 or 2021 or 2022, you can order a physical good like a mattress or a car, and you can have that delivered tomorrow, but it still takes you 60 days to get a mortgage closed. So that was in the back of my mind when I got off active duty and I went to Harvard for business school, knowing that I wanted to found a company, and I wanted to found a company that solved big problems in large markets. The biggest problem in the largest market that I knew was that the journey to homeownership is fundamentally broken. And so I met my co-founder at Harvard. We got obsessed with this idea, and we wound up dropping out after our first year and starting this company. And uh, we've been at it for 3 years now, and we're trying to change the way that people buy and sell homes in this country.
Oh man, that's so cool. And so what is different about UpEquity? By the way, just so everybody knows, a couple things. Tim is hiring. If you're in Austin, you might want to reach out, loan officer, other roles. We'll get to that at the end. Second thing is Tim's super bright, right? Like he dropped out of Harvard MBA to go start this company. Very hard to get into Harvard's MBA program, by the way. And he was also in Y Combinator. And I was in Techstars before, and these are companies that invest seed stage money in companies like startup ideas. So super impressive. Y Combinator's, the top. So I'll let you go ahead.
Yeah, Y Combinator helped me convince my wife that it was okay that I drop out of Harvard with two small children. So we really appreciate Y Combinator. Appreciate the network. We appreciate the lessons that they taught us. But basically, you were asking what is different about what we do. We're a power buyer, and so we have two unique differentiated products. The product that for the first year and a half, 2 years, that was really flying off the shelf was our cash offer product. And so with that, we would actually make a cash offer for our buyers, and that would be completely free for them as long as they used us for a mortgage. The reason we were able to do that is because we built proprietary technology to automate the mortgage underwriting. That's not what I'm as excited about right now, not what I think that your clients and your listeners are going to be really excited about. What's flying off the shelf right now, what has grown 10x this year, is our buy before you sell product that we call the trade up.
Hmm.
And with that product, we solve the problem of timing the two transactions. This is for the people that have to buy a home and sell a home and move all at the same time. Richard, I'm sure that some of your clients have faced that, and some of your real estate referral partners have faced that in the past. Is that a fair assumption?
Oh yeah, for sure. Oh my God, very common, and
Very common.
very like that whole experience is just not baked out, right? It's very much like a figure it out, unless you get a really good mortgage advisor.
So not baked out, adds a ton of stress, adds a ton of uncertainty, and what ends up happening is you get clients who stay on the sidelines because they're afraid of it, or they have to move twice, or have to move in with their in-laws, or they have to take all these extra costs, or they sell their house to a lowball offer because they're stressed out about getting out, or they make a contingent offer where they have to offer too much on the next house. All of these are bad options,
The
and we
contingent's
saw
probably the most common, right? And those fall through, I would say, more times than they don't.
right. And so what we have seen is that non-contingent offers can be accepted for 2 to 4% less on the purchase price, and that when you're not in the house in the way of staging and marketing, and you're not under the gun, that homes sell for 1 to 3% more, right? And so
Hmm.
if we could solve this problem, we could create a ton of value for loan officers, we could create a ton of value for real estate agents, and we could create a ton of value for consumers. And so what we do is we'll buy a client's existing home, making sure that they get full market value for that home, and we do that so that they can align those transactions perfectly, and that they can get into that new house with a non-contingent offer. Does that make sense?
Oh yeah, that is so cool. So I don't know if Ribbon does that. Ribbon is a tech out there that allows people to do all cash offers. I don't know exactly the process and such.
Hmm.
But it sounds like you have home built this exact same process, but different also for the buy before you sell. You are solving a huge problem for a lot of buyers, that's for sure. I'm sorry. Yeah, yeah, for sellers and buyers.
Yeah, absolutely. Ribbon's a great company. There's a couple companies out there that are doing similar things to what we're doing. We're rooting for all of them. We think that the more that there is awareness that there's a better way to buy and sell, the easier it is for all of us to thrive. And um, the biggest problem that we had when we started pitching realtors and clients was, "This sounds too good to be true. How are you screwing us over?" So if there's awareness that there are new, better ways to buy and sell, it just raises a rising tide lifts all boats. And so we're rooting for everybody, but we do feel that we have a differentiated and the best version of the buy before you sell product.
That's cool. And so is that how you pitch when you're talking to referral partners? You start with lead with that basically and just let them know like most folks that are selling their home are probably going to be buying a home. Here's what we do for them.
So it depends on what kind of referral partner we're talking to. And yeah, I assume that most of your listeners are mortgage brokers, mortgage bankers, they're loan originators,
Yep.
right? And so what
Or executives at those companies. Yeah.
right. And so we actually just launched a white label version of this where a local mortgage bank, a local mortgage brokerage can go to their referral partners and say, hey, I am a mortgage mastermind. I have the mortgage mastermind trade up product that's powered by UpEquity. And let's talk about how we now have a partnership that can help you sell more homes and get more clients off the sideline.
Hmm.
Right. And so we have the ability for our mortgage banking, mortgage brokerage partners to offer these services in a way that they can create more value for their realtor referral partners and for their clients.
That's awesome. Well, so I'm a huge fan of that. I think that I think I don't, are you only in Texas or are you in other states too?
So we're in about 15 states right now. Our ambition is to be nationwide by the end of next year. With the trade up product in particular, we can buy homes in any state.
Very cool. Well, that's what I was getting at right there. And so like kind of so where why don't you talk to me a little bit about where are you seeing a lot of success in your business right now? Like where are you getting a lot of opportunities from? Is it from, realtors? Is it from other marketing channels, maybe social media? And what is working for you and what's not?
Yeah, what I would say is that the core of our business has always been referrals from real estate agents. It's been purchase business that is driven by referral partnerships. What I'm excited about again is that we're giving other loan officers the ability to strengthen their own relationships with realtor referral partners. I would say 95% of our business comes from realtor referrals.
Hmm.
The other small piece of the business comes from AdWords and basically paid advertising.
So, given your military background, do you do a lot of VA loans? Is that something you would consider to be somewhat of a specialty?
So um, I wouldn't quite consider it a specialty. The reason that wouldn't consider it a specialty is the VA has a few arbitrary guidelines that we're trying to work with them so that we can offer the cash offer on the VA loan. We are, I would say that we know the VA guidelines very well. The VA guidelines work really well with the trade up product, but they didn't work well with the cash offer product that we were offering for the last 3 years. And so, as the market shifts, I think that we're going to be doing much more VA business, and I'm excited about that, certainly.
Very cool. So I'm going to throw an oddball question out there. This is an oddball one because it's more about running a company in this environment, a mortgage company right now. And
Sure.
so my question for you is, if you've got vendors listening, and we're partners with tons of vendors, we're vendors ourselves, right? Mortgage Coach and Sales Boomerang merging under one brand to be announced soon. But when you've got vendors talking to you, what are the types of things that they need to be saying for it to resonate with you? And I talk about to other vendors about this all the time, right? Because you are facing pressures that people who aren't originating don't understand, right? So, like, what do you need to hear to get your attention?
Yeah, it's an interesting question, right? Is with the uncertainty in the capital markets and with the uncertainty in the size of the origination market that's out there, every dollar is more important today than it was a year ago, and we need to make sure that we're taking a long term view and being good stewards of the financial assets that we've been trusted with. We have a little bit of a different view than I think most originators because we're a venture backed company. We have a little bit different resource model and we have a little bit of a different time horizon. But what matters most to me, because what we're doing is we are fundamentally rebuilding the origination process, right? What people don't understand is that originating a mortgage is a manufacturing process and it
Mm-hmm.
takes a manufacturing plant to put those widgets together. And most mortgage companies are built on outdated technology that doesn't doesn't work well together. It's not compatible with cutting edge technology. So to answer your question, what I'm the most concerned about is, do you have a world class modern API with good documentation that can actually fit seamlessly into the technology stack that we have? Because what is most important to us is building a world class experience for loan officers, realtors, and clients, and that starts with having a modern manufacturing plant for that mortgage.
That's a great answer. And I just think you can definitely, I'm not saying you're young, but you can definitely understand your appreciation for a modern tech stack, a modern API. Usually that's, the older generation, especially the CEO that's running these companies, is less concerned about that. They're concerned about other things. You know what I mean? Like loan officer retention, which is important equally as well, right? But different than where you're coming from.
Yeah, I mean, I think that that the core is having the best process in the world. Is if you care about retaining loan officers, you have to give them the tools to actually originate and make money. If you give loan officers the ability to sell more loans and do that with less time, I think that retention will follow.
So would you say that is this a fair thing to say? Tech company first?
Absolutely.
And I love it. There's a whole new breed of mortgage lending companies that are adopting this. I wouldn't say the majority at all, but I would say that is the difference between the younger generations that are taking over mortgage companies right now or starting their own. Is that they are 100% tech focused. They see the value in exactly what you're talking about, building the most efficient loan manufacturing processes on the back end, because that really is the difference. I think that's what gets a borrower to close within much lower than 60 days, like you were talking about earlier.
Yeah, so we're actually guaranteeing nationwide 18-day closes with our cash offer. And
Wow.
by the way, I'm not saying a guarantee like a lot of companies out there where it's just a marketing shtick. We're literally saying if we can't close this house in the next 18 days, we will buy the house.
That is awesome. You know what's crazy? Well, I just bought a house recently, the one I'm standing in right now, and it was almost 60 days for the money to finally get to get for the loan to get funded. Let's put it that way. And it was literally I was going to closing, and I'm like sending the lender documents at the last second that morning that they asked for, and I'm like, how is this possible that we're in this situation in 2022 and you guys didn't ask for this stuff long before this closing date? We've been waiting like almost 2 months, you know?
Yeah, in what other industry besides maybe Congress would you accept such a low net promoter score? Right, the net promoter score of the mortgage industry is somewhere around 16, which is absurdly low, especially when you think about how important homeownership is to the fabric of our society and how important homeownership is to the financial well-being of our customers. It really is the most important decision that most people ever make besides who are you going to marry and how are you going to raise your kids. It has to do with what home you're going to buy and how are you going to finance it, and that there is such a low bar for customer service. And I understand all of the regulations. I understand there's lots of hardworking people out there that are trying to do their absolute best, and this is a difficult problem to solve. But it just doesn't seem that we should accept the status quo. It seems that what our industry is delivering is not good enough currently.
Oh, I love that. I totally agree with you. And that's the attitude I think to have, right? That's how we get better every single day. So I got one more question for you. I think it was on Wednesday. Fed raised the rates by like 75 basis points. Everybody's watching it. Everybody's talking about it. Doesn't make anybody feel good when you look at the projection for the next year. Is your mental place that you're trying to survive for the next year, or it's survival for the next year, or is it more like I think we can actually thrive over the next year? Like how are you approaching this? Because you know what's going to come. We're going to get to like 7% on average, right?
Yeah, I think that we can thrive. I think that, and what I say to everybody in our shop is, okay, fine. Purchase volume's down 20%. Maybe it goes down 30%. We're not in the business of forecasting. Um, we're not in the business of forecasting interest rates. We're not in the business of forecasting volume. If it goes down 30%, there's still $2 trillion of mortgages out there, and we have the best product. So why can we not go find all of those mortgages, and why can we not go find all of those people that need to buy before they sell? And beyond that, with the uncertainty that this environment provides, our buy before you sell product, like I said, has grown 10x year over year. And it's a perfect solution that gives people safety and security and the ability to sell their house for maximum value in an otherwise uncertain and stressful world. I'm looking at this as a massive opportunity for us. I'm not putting the blinders on. It's definitely a terrifying market out there. But what I'm saying is that we have the products that we can thrive, and that the people that partner with us can thrive.
I love that. That's got it, man. That I'll tell you, that would pair so well with our listing. We have a listing alert where we send a notification the moment someone that you know lists their home for sale, and the loan officer gets to call them up and say like, "Hey, just noticed you listed your home for sale. Just checking in. Is there anything I can help answer for questions?" You don't have to say like, trying to get the next mortgage or anything like that. But the buy before you sell would be such a great conversation to have in that environment. Just like, have you found a home that you're going to buy already? You know what I mean? Like, what's that next step look like for you? Because I think, everybody needs shelter, right? And everybody needs to put that to work.
That's the other thing that we talk about, right? Is you hit the nail on the head. Everybody needs shelter. Whether rates are 6% or 7% or 10%, people still have kids. They still have jobs that get moved. They still get divorced. People need homes, and we need to be there to give them the tools to get into the right home at the right price with the right services along the way.
Yep, 100%.
But,
Well,
but by the way, I think that you're right. I think that your listing, what's it called? The listing notification.
yeah, it's a listing and piece of intelligence. It's a listing alert. It's an alert that the loan officer gets the moment someone lists their home, and it's like, hey, I should probably reach out to this person. They didn't reach out to me.
Right. No, I think that you hit the nail on the head, that if you combine that piece of intelligence with a differentiated product that gives you a reason to call to say, hey, Richard, I saw that you just listed your home at 123 Main Street. I just got this product where I'll buy your house from you for full market value so that we can remove all of the stress and get you into this next one. I don't know how you don't sell that.
Yeah, totally. I mean, that's one of our highest converting pieces of intelligence. We have a lot of really, really great alerts, but that one in particular is cool because then you can turn to the realtor who you might have done that deal with before, and also give them that intelligence, and they might get a deal. And boy, did they get loyal when you do that kind of thing. When you suddenly are giving them value, because what loan officer is actually giving value to realtors? They're just have their hands out like this, they're just like, please give me business. And that's not a way to start a relationship, in my opinion.
Yeah. So not only do I think that, I believe that so much that with the mechanics of how our buy before you sell program works, we actually have the ability to pay an extra commission to realtors. So we're putting our money where our mouth is, and the people who partner with us, like I said, create real value for the realtor, not just because they get these 2 extra deals off the sideline, but they also say, hey, when UpEquity purchases this house, they're not cutting you out, they're paying you an extra commission.
Wow, that is awesome. Super powerful too. You want to talk about generating loyalty. It's really hard to be a realtor out there right now in this market. There's a ton of them, and there's a lot fewer listings available. So they're working really hard. I think the average realtor does 12 deals a year. If you can give them just one more, you are making a huge impact on their life. And not just one more deal, but any amount of extra income they could make on each of those deals.
Yeah, we view realtors at the center of the transaction for the future. We think that realtors create enormous value. There's lots of tech companies that have taken the stance where they want to cut realtors out. We're absolutely the opposite. We think that realtors belong at the center of the transaction, and that they create enormous value for everybody in that chain, but specifically the consumer.
Well, Tim, I got a lot out of this. This was fantastic for me. Thank you for joining us. Before we go, is there a plug that you want to give to anybody who might be in the Austin area that you want to talk about? Because I know you're hiring, right? And that's very different from a lot of mortgage companies right now.
Yeah, so we're hiring loan officers, we're hiring sales managers, we're hiring software engineers, and we're hiring real estate operators. So anybody that's interested in creating the future of the real estate industry, the future of the mortgage industry, creating a better way to buy and sell, we're happy to chat.
Awesome. Well, Tim, thanks so much for joining. I'm looking forward to having you on again. You would be a fantastic guest for some of our webinars that we've got coming up.
Awesome. This was fun. Thanks for having me.
Thanks for listening. If you like the podcast, please give us a 5-star rating, subscribe, and tell all your friends about the show. We at Sales Boomerang started this podcast to elevate the mortgage lending industry by sharing the kind of exclusive, insider knowledge from the successes and failures of the best of the best. The foundation of every successful lender is borrower retention. Sales Boomerang is the #1 fully automated borrower retention system in the industry. 1 in 2 of the biggest lending companies in the United States use Sales Boomerang to make sure they reach out to their borrowers when they need a loan, and more importantly, before their competitors do. If you want to learn more about Sales Boomerang, check us out at salesboomerang.com.